Hi everyone, you're all very welcome to another Alpha Capital interview, trader call today. We have Matt from Atlanta, from US. Obviously going through today we actually going to go through his metrics, talk about his data, his past performance, but obviously more about Matt himself as a trader, what he looks at, what his philosophies are, and so on. So Matt, without further ado, do you want to maybe talk me through a bit about yourself?
Yeah, sure. So I'm actually an Iraq War veteran. I kind of came to trading as like really early in the financial crisis. I was kind of like coming of age right as the financial crisis hit, and that kind of motivated me to, shape my beliefs about the market, just seeing how easily trades can unwind, how you need to manage your risk. Really, I got burned on investing early in the stock market just when I really didn't know what I was doing. So I've just been since ideally as a teenager, I would say, I've been slowly building up knowledge. I have a massive trading library, probably 30 or so, just trading loan books. And yeah, I've always had a keen interest in the markets. Have a degree in economic history, actually, from University of Glasgow.
Okay,
And
unbelievable,
yeah.
unbelievable. So I suppose the military side, the previous academics, it's definitely probably impacted and forged your not just your viewpoint in life, but obviously your viewpoint on trading and how you look at things. And
Right.
cool, that's really really
Yeah,
cool.
I'd say it definitely did. So like part of what I would study is I actually did a thesis on the first like global financial crisis back in 1857. So I actually kind of got interested back then in just looking at the markets. Like one project that I looked at, for example, was I was looking at the long-term decline of the pound sterling, just for example. And this is wild seeing the data from in some cases 100 plus years ago, and just watching it slowly adjust downwards against the US dollar and the US dominance that we see nowadays. And yeah, it's
And now the subsequent decline potentially in the dollar.
yeah, well,
Potentially,
maybe.
maybe.
Right.
Great.
We're gonna
Yeah.
we're gonna change around now.
Yeah, well, should they say the reserve currency changes about every 100 years or so, every 120 years. So we're
Right.
probably due for one now, probably in the next 20 years or so.
That's right.
Do you want to maybe talk me through about your trading style, your strategy, kind of what you look at, maybe the instruments that you're trading?
Yeah. So during the early stages, I was doing a lot of Hong Kong 50, and mainly I like the Dow. It's just so easy to get in line and just jump into a trade right around the New York market open. So most of the time, today I was a little late on it actually, but it still worked out. But I most of the time I'm getting in right either at the market open or just before the market open. So I'm either catching the early volatility up or catching it down, and usually it'll end up reversing. Like today, it actually the Dow dropped at the open, and then now it's kind of moved back up towards the middle, a little bit of a retracement. So um, today would have been I probably would have hit take profit a little bit easier if I had let it run longer.
Mhm.
But that's mainly the idea is I'm scalping around the momentum of the open. I also have a swap collection strategy that I've done before on different pairs, different brokers, but right now I'm doing that on some of the commodities here.
Okay.
And yeah, I really love it. It's been a great
Very well.
experience.
It's
Mission for
obviously
me.
it's obviously proven to be worthwhile because you're funded. You've gotten through stage one. You've gotten through stage two, albeit
Right,
with phases of drawdown. I don't think there's any trader who doesn't have drawdown, but it's longer
right.
term progress, really, isn't it? And I think you're getting there, which is brilliant. So you're talking about volatility.
Mhm.
Do you use any volume profiles, or are you just specifically a price action guy, or do you use any indicators within your strategy?
So the indicator that I rely on the most right now, and for quite some time really, is the average true range ATR indicator. And I try to look for Dow basically to be sometimes as much as a 50% increase from what the Asian session was doing. So, you're basically just looking for it to be more active. So that's all you're looking at whatever it was doing before, try to get more active, assume it's going to stay more active and move, flow, get in, get out,
Mm.
hopefully quickly is my
Yeah.
goal.
So,
I try not to hold on too long.
yeah, so you're conscious of volatility, but you're also conscious of volume and liquidity within the markets. Because of course, if there's not much
Yes.
liquidity, there's not much volume. Really, it's quite difficult to do the in and out that you're kind of looking for, whether it's up or down. It's irrespective, but to try and get the strategy met, that's quite cool. That's quite cool. So,
Yeah.
so you're obviously short term trader, which is interesting. So you're less, I presume, then you're less focused on outside fundamental events. Then is that the case?
I'd say, yeah, a little bit because I do. So, for example, I do read the Wall Street Journal paper form daily, and I follow the news. But lately, just what I've been seeing is that the news will come out, everybody expects something, that doesn't happen, and
The
then the
opposite.
market will hard reverse.
Yeah.
Federal
Yeah.
Reserve days, you know.
Yeah, yeah, of course, of course, of course. Fantastic, fantastic, brilliant. I suppose, do you want to maybe go through that quickly? I suppose now that you actually have it open. So I see
Yeah,
you've got funded on the 200K account.
that
Um,
is right.
you're only recently funded, I suppose, in the last few months or even less than that, a few weeks or so. So you've already taken two payouts. I'm seeing just over three grand in total payouts. So that's obviously a great start of the year.
Oh
Now I
yeah,
do obviously see you have a little bit of drawdown in between that, but you've obviously done quite well to manage drawdown, manage expectations within obviously your
oh yeah.
funded account as well, which is pretty cool. So what do you normally look for then? I suppose when you're trading, do you focus on risk reward, or are you just solely kind of one of those traders who tends to focus on the dollar side, just try and build that account? What do you generally look for then on your metrics and on your data and obviously within your trading plan?
Yeah. So when I'm taking a swing trade, like one that I had just closed after the pound news with the Bank of England today, um, that one I'll do a much smaller size. Like I think I only did about a zero point 0.3 lot on that, and I did a huge stop. But I was only risking $500. So the R to R was actually really good ratio there. And I actually ended up closing that out for just under what I risked. But it was a solid $400 gain about.
Mm-hmm.
And never really had much drawdown on it. I think the most was about $100 drawdown. So $100 on a 200K account. I'm
Yeah,
trying to do.
it's quite low risk, quite a low risk profile,
Right.
which is good. I suppose
Yeah.
I think you'd probably be one of the main guys to advocate for this, but I suppose when it comes to trading, it's not necessarily about how much you can win, but can you incrementally kind of stably make those profits? And I think that's
Right.
consistent, whether you're focused on the P&L or whether you're focused on or to or maybe a combination of both, which is I think is pretty cool. So
Right.
um when you're trading then do you look at multiple positions then when you're opening and closing, or are you just like maybe a single scale in, or what's the general approach that you take?
Yeah, I will do multiple positions. I try to not do more than 2 to 3. Like if I'm doing two and it's a loser, that feels like you're just digging that's more of like what you see here with this drop. I think that day I actually ended up having over 3 positions at the same time, and it cost me. So
Yeah.
now my thing is adjusting, keeping it to a very small amount of risk, a very reasonable amount of open trades at the same time. But yeah,
Yeah.
2 to 3 is ideal.
Okay. Interesting.
It's a little big.
I think what I find interesting there, even since you've got funded, obviously you've taken that kind of 4% drawdown, roughly, or 3.5% drawdown. But
Mhm.
like 3.5% to a lot of people can be a lot of money, and I suppose even on a 200K account, it's still a lot of money. But finding that way back, that grit and determination, I think is really, really important. I think as a trader, just like looking purely at your metrics, that's something that a lot of traders don't have, that resolve to be able to kind of come back. And I think that's really, really brilliant. So I suppose then, how do you, in the face or in the times of drawdown, how do you look at your metrics, your data? I presume you're constantly looking at your metrics, you're constantly looking
Always.
at your data.
For example, here we can see it, that max, that 6,900 net drop.
Mm-hmm.
I am always obsessing over my max daily loss. Especially on that day, actually too. I try to stop way before I get anywhere near this number. But this is mentally, my real number is about 3%, is the most that I try to allow. So -3% on a given full trading day.
Yeah,
Uh,
but that's not so bad. Like, because 3% is obviously 3% drawdown is not ideal, but it's a hell of a lot better than 5 or 6, where you're obviously breaking those rules with any organization. I think that's quite important as well. So
exactly.
that day, so I suppose what was going through your mind that day, because I think that's what maybe a lot of people might be able to resonate with, those who maybe have bad days. How or what did you do that was allowing you to say, right, I've taken 3.5% drawdown? What was your thought process in terms of getting that back? Was it just maintaining calm?
Mhm.
What was going?
So yeah, so in that case, I know basically what happened was I went from 47 lots, was the max I think I had opened at that one time. And I said, okay, this is crazy. I can't swing 47 lot losers on Dow. I mean, that's a huge percentage swings. So I dropped it back down. I dropped all the way back down to sometimes, I think today actually I did 8. But sometimes I'm doing 8, 10, 12 lots or so. So about, $12 a point or so. And I just hit very small targets that are just repeatable. You're not making a bold move on the market. You're just scalping a little bit of momentum and going again the next day. So that's why you can see like right here, the little step ups that I did each day. Those were just morning Dow sessions where I would hit it, stop, adjust for the day, and then go again.
Okay, that's really interesting. So you're kind of saying, well, looking at the bigger picture, let's work ourselves back. Small targets becomes then incrementally bigger targets then
Right.
over, rather than a 1 day period, then over maybe a week period or a 2 week period. Okay, brilliant. Because I think I know with psychology, that's one of the hardest things that traders tend to have. If you've had a bad loss or a bad day and you're taking 2, 3, 4, 5 grand out of the markets as a potential loss. Now I know percentage terms it might only be 2, 3, 4%, but in real terms, $4,000 or $5,000 loss in a day in a retail trader's perspective is obviously quite a lot. So it's interesting to kind of to hear that. I think that's quite interesting and quite important.
All right.
And then obviously being able to journal that and then being able to review that as well is uniquely also important as well in that regard. So I suppose then kind of fast forward, right? You've got funded now. You've progressed through the 2 phases. You've taken now just north of 3,000, obviously already in the last 2 payouts, which is a great start. What have you? I presume you've got goals and objectives for the year, or kind of a plan in mind. I presume that you're kind of looking to do this year.
Yeah. So my big thing is I want to maximize what I can do with Alpha Capital. And I'm probably almost every day in contact with Alexander. Not as much George so much, but probably at the beginning I was with George. But I love the team and I am, I'm getting ready to hopefully get a second 200K account once I get some more payouts under my belt and hopefully in the next month or so. And yeah, just sit back. I mean, because right now I'm just looking at, small gains percentage wise will stack up and the future is definitely bright with Alpha Capital right now.
And I presume as well, it becomes like that repetitive nature, kind of those small
Mhm.
gains continuously kind of compounding. You that kind of worked or kind of had a kind of provision really in the financial markets, like looking at right investment returns,
Right.
equities, smaller growth over time. I think that's quite interesting as well. So you're kind of looking at right longer term, 1% here, 1% there. It adds up over time. I think that's kind of
Definitely.
what you're coming from. Brilliant. Okay. So I suppose the last question then, very, very quickly, I suppose
Sure.
looking back on your journey over the last number of years, not just obviously coming back as an Iraq veteran, but I suppose your journey through trading, what would you, as someone now looking back, what would you tell yourself as a newcomer, or what would you tell someone else as a newcomer to focus on when they're coming into the
A
markets?
good one. So I would tell myself, slow, steady. So actually, you see what we have right now, the 3153 number. I'm
Mhm.
actually probably going to stop for this payout period, even though I have so many trading days left. So I just would tell myself, this is a good payout. Take it easy, relax. You've done well, reset, come back again, mentally, refresh your mind, take a little bit of leisure time, don't rush. That's my biggest problem.
Yeah.
I've blown accounts before just rushing, and I'd be like, wow, I was up that much percent and I undid it all. So it's like, just take it easy, take it slow. Slow is fast.
Slow is fast. I like that. Slow is fast. Slow is fast. Yeah, definitely. Like, and even as well, if you were taking, like, you have to look at the bigger gains. 3 grand a month
Right.
is what, 36, 40 grand a year. If you're obviously already working full time anyway.
Right.
So I suppose like that extra 40K, it's a hell of a lot, a hell of a big difference.
Yeah.
I suppose the only question I would say is, how do you find it? Do you find it hard to manage a full-time career with trading?
I actually have been doing pretty well with it. I'm pretty flexible. I can work remote some days, and those days I can put more chart time out. And we can even see it right now. I have US 30 running in the background, just
I
letting the
see that
price run. There's
bit.
just no trades open on doubt, but I'll have it running in the background just so I can mentally see what's going on. And yeah, I have like that tape read that like Jesse Livermore would talk about, where you can visualize the price a little bit. Like right now, I see it's down a little bit from what it was about an hour ago.
Yeah.
So yeah, I make that mental picture, and I love it. I just love the markets.
I do actually like that idea as well, being able to nearly visualize on a given day, well, I know euro dollar is going to be at X price, or S&Ps are going to be at X price. I think that's really, really interesting. Really, I'm the same myself, actually, to be honest, but really, really brilliant. Well, Matt, thank you very much for taking the time out to do the call. Obviously, best of luck, not just for the rest of the month in terms of going forward, obviously, as you progress through with us. We'll definitely be sure to do another call probably in about 3 or 6 months' time, just to see how you're progressing, just to see how's things going for you.
Sure.
And obviously best of luck for 2023, my friend. So, and
just as
that we've been booted out, so maybe that's a sign. So, but brilliant. Anyway, Matt, as I said, have a great week. Thanks a million, obviously, for joining us today, and of course, we'll be chatting to you again very, very soon.